Hey everybody, this is Julian Marchese, and today I'm going to make a little video on a potential swing trade, or potentially even a day trade, in the S&P 500 E-mini futures market. If you are not familiar with how I trade, I use auction market theory and its principles. If you just search auction market theory on Google, I'm pretty sure a few articles will come up on market profile and reading the market through an auction lens. The whole idea of auction market theory is to identify where value is and take trades when a market extends out of value. And if you check out my one of my previous videos entitled Auction Market Theory Basics, um, it will go through a thorough explanation of what auction market theory is. Okay, so let's dive right into the trade that I'm looking at in the S&P 500 futures market. Um, so let's just go back onto a bar chart and look at what phase the S&P 500 is in. So let's go all the way back into a daily. You could see from September, this market has been rallying from 1050 all the way to 1225. That's a good 175 point move in about 2.5 months. Um, you could see we had a nice 2-day up move in the beginning of the trend, and we've had recently in the beginning of November a nice 2-day up move. Now this could either be an exhaustion move, there was quite a bit of volume, but this could either be an exhaustion move or we're going to push a little higher above this level. But usually when we see such a big drastic up move after such a um, large advance in the stock market, it usually signals some form of a pullback. And you could see that in previous moves. You could see we had this nice 2-day up move here, which started this move up. And then you could see right about here we had another extension up. So throughout the beginning of the trend over here in February, you could see these 2-day up moves. And then we start going into this ranging but slightly bullish activity, which is what we had over here. And then in the last few days or weeks of the move, you could see this little push up, which is exactly what we had, except to new highs. And you can see what followed it, the flash crash, over exaggerated it a little bit, but in other words, we are expecting some sort of pullback in the next few weeks. However, when we go into the 60-minute chart, you can see all the important levels to watch, like this high volume area and the beginning of the overnight up move from the Fed announcement, is still intact. So nothing has breached this area. So in order for me to have a intermediate term or short term bias to the downside, I would need that high volume to break, signaling this whole move upwards over here has exhausted, and we'd have to get below that. Uh, so in that view, if we think this market is going to do that, we could take a certain trade off of that. So let's look even shorter into this market's conditioning. Now you can see that we are in a range. We are in a range from 1202 to 1215 and a bit above, at about 1216. That's a balance area. But an area of balance is an area where the market has found an equal price where the buyer and seller both agree. So if price stays between this area, that means the buyer and the seller both agree that 1202 to 1216 is a fair area to trade at. But before we got into this area, we went into a balance area from about 1212 to 1225. So we did have a balance area higher before we went into this. So as clearly visible, we went into this balance area to the downside. So there is a slightly negative bias on the intermediate term, in the short term, excuse me. So let's look back at what we have. On the daily, we have a strong up move, however, signs of exhaustion. On the 60-minute, we have some bullish activity unless we get below 1195. And on the shorter term, we have some bearish activity. And even if we go even shorter down, we're just ranging in the shorter term. But if we so there are two things you could believe. Either we are gonna break above the 1217 area and negate this bearish direction in the short term and continue this upwards direction on the 60-minute all the way up and break the 1225s. And if you did have a strong feeling about that, you could have gotten short this market today in the lower edge of this bounce area around 1202. However, if you believe this market is going to break down, sort of like where this arrow is pointing to, and break below this bounce area we have in the 1197, what you can do is, I'm just going to get my drawing tool out here. So what we could do is, if we start to see this market trending higher into the 1215 area and start making a range just like we did before on this very low volume over here, we could short the upper extreme of it at 1216 with a stop at 2020 half. And why would we have our stop at 1220 half? Well, let's check that out. Let's go to our market profile, and this is the area where we have identified a potential short. This 16 area. This was a high volume node from November 9th, and this was the high of the day yesterday. Do you see this balance area that has formed over here? This area was in the 17 to 19 area. So if we get above that 19 area, or around that 20 half level, that would negate this trade. So we have a 4-point risk over here. So we're showing at 16 half, risk at 20 half. That's a 4-point risk, with our potential reward down to at least these lows at the 1202. So you have an what we have here is a 14.5 potential gain. So 4 against 14.5. That's about almost 4 to 1 reward to risk. And potentially, if this market looks like it's going to break these 1202s, which it most likely will, as it would be a third test in this bounce area, we could see a potential move all the way down to this bounce area in the 1196. So this can potentially be a 20-point trade from a 4-point risk. And over time, if you do that over and over again, you will make money no matter if you take the long side or the short side. It's all about the risk to reward. This also makes for more relaxed trading, as you don't have to worry about having a win rate above 50%. You could make money using this method without a 50% win rate. So let's just go over this trade and how I might plan and take this trade. So if we start to see this market rally all the way up to the 1216 area, which I will highlight over here, you could take a short at around this price, let's say the 1216, with a stop at around 1220 half, which is right above the high volume node and this day's close, the November 8th close. And you got quite a bit of wiggle room, so this market could, continue higher here and wiggle around here, stop people out, then begin to drop. And we also have our reward down in the 1202 area. So you could just see by looking at this chart, this is our risk, this is our reward. You could see the great difference between the two. So if we go back onto our bar chart, same thing. If we start to see this market climb into the 1216 area and starts to halt there, showing some selling pressure, two-sided activity, there's a 50% chance that this market will rotate all the way back down to the 1202 half and potentially lower. So great reward to risk trade here, and I hope you guys can benefit from it.